Ladies and gentlemen, welcome back to the channel. Oh boy, did a lot happen over this weekend that could affect markets into this new week. As you can see, crypto is having a bit of a problem. Bitcoin sitting at 77,000, hitting a low over this weekend at about 76,800. Okay, this is the lowest you have been since the crash back in April. And I want to discuss how this could affect the markets, what's going on, why are you seeing this downwards pressure in Bitcoin and other cryptos. But I have discovered definitively what is wreaking havoc on this market. Software and technology specifically, healthcare and some banks and defensives, they've done okay. Even Tesla has done okay relative to other stocks. Pull up Palantir, Robinhood, Reddit, like name the stock, technology or software, it's getting smoked. Okay. I've identified why, and I'm going to share that with you in today's episode. And it's likely to be very good for stocks in this upcoming week if, all things are considered. So we have a lot to get into in today's episode. Hit that like button as well as subscribe to this channel if you guys have not done so already. We are going to start this video off with your Tesla stock news and then get into the other things that are happening today. Now, in the news today, Waymo is aiming to raise $16 million at a $110 billion valuation. Alphabet is going to provide $13 billion of the funding deal, and the rest would come from other people and companies. The prior investment round in October 2024 valued the company at $45 billion. So this is a big move higher. It's what, 150% difference in the valuation that the company is being, quoted at here. And that's a good thing for Tesla as well, right? When another company's valuation's going up, it's a good sign that Wall Street is paying more attention to the new technology, which is autonomous vehicles. And you're also starting to see the valuation reflected of that. Here you can see from this guy on X, Sladak, he says here, 11th attempt finally succeeded in riding in the driverless robotaxi. Now, it was reported yesterday that SpaceX is requesting to launch and operate a consolidation of 1 million satellites with unprecedented computing capacity orbital data centers to power advanced AI, according to a new FCC filing. Somebody commented and said 100 gigawatts of AI inference. Elon Musk says here, most of training is inference for the purpose of training. So these work for a majority of training workloads too. Now, somebody here says, quote, I'm thinking of canceling my Model Y order since Tesla is getting out of the car business. Resale value and parts availability will be a huge concern. Sawyer Merritt says here, Tesla isn't getting out of the car business right now. They're simply discontinuing 2 vehicles that accounted for 1.8% of global unit sales to make room for a product, Optimus, that could generate multiple orders of magnitude more revenue at full scale. Tesla will continue to sell cars right now because it's providing the cash the company needs to fund their robotaxi and Optimus projects. XFreeze on X says Elon Musk just shared a major update on Tesla's AI roadmap, and the scale is wild. With AI 5/AI 6 designed for space and early deployment at low gigawatt year levels, AI 7 and Dojo 3 built to scale beyond 10 gigawatts per year, and Dojo 3 and AI 8 targeting 100 gigawatts per year. Elon says maybe I typed it wrong, but I meant to say AI 8 and Dojo 4. So confirming that a Dojo 4 is at least being thought of right now. This is big news today. Not surprising news, I will say, because Elon was meeting with the Prime Minister of Israel and a bunch of officials in that country. They literally said that they want to advance autonomous technology in Israel. Israel has really always been like the tech hub of the Middle East. Obviously, if you include like Dubai in that as well. It says here, Tesla to begin autonomous driving trials in Israel. The Ministry of Transport today approved Tesla to participate in a trial in which the company's vehicles will drive on roads with FSD supervised. The Ministry of Transportation said, quote, the trial represents a significant part of Minister Miri Regev's work plan to strengthen Israel's position at the forefront of development, testing, and implementation of advanced vehicle technologies and turn it into an international center for smart and autonomous vehicle development and testing. Now, Tesla had earnings last week, and we got a lot of new information. FSD subscription rates. We know there's 330,000 people that are subscribed to FSD. That's only about $380 million a year. Highly profitable. It adds about 10 cents to EPS. What that is doing is allowing analysts to project out to the future and what that's going to look like. Now, Elon Musk and Tesla said that they expect to sell Optimus by the end of this year and in much larger production next year in 2028. You're putting Optimus out there, and for such a large potential that Tesla has with Optimus, it is not something that Wall Street has even thought of pricing in yet. Like, Optimus does not move Tesla stock, okay? So that's big, and I think that will continue to, over time, get priced into Tesla as they get closer and closer to actually having Optimus. Tesla put out a roadmap for robotaxi deployments, targeting around a dozen major cities in the first half of 2026. So some incredible progress there. We'll see what is on the other side of 2026 as well. Tesla obviously discontinued the Model S and X, and they are going full tilt on AI. Tesla has morphed in real time in the last week into a company where literally you cannot pay attention to what the auto business is doing. Like, I couldn't care less what the auto business is doing. No growth is fine with me. As long as it's not like plummeting or something, it's no longer a catalyst to move the stock. It is all about AI. And that was the big shift we had last week. Now, I want to say this again before we get into all of the other things we're going to talk about here in this video. Yes, we have exposed what is going on, or going to expose what is going on in the markets. Why so many stocks right now? Why basically all risk on stocks are down 20% on a good name. Like Microsoft's down like 20-25% from highs. Like that's on the better side. Some of these other stocks are down 50-55%. Why is that happening? Well, we now understand exactly why that is happening. And we do have some events coming this week. But Tesla has done very well. It's kind of bucked the trend. Tesla's only down about 12% from its highs, which I know if you're in Tesla, you might be like, damn, that sucks. But it is multiples better than other stocks, other high quality stocks. And I think it shows when things do get better, you are going to see Tesla outperform. I've only grown more confident in my ambitious price targets for Tesla into the end of this year. Now, there's two things we really need to talk about here. What is happening in crypto and what is happening with the broader markets. Now, they kind of feed into each other. At the same time, they're different. So what essentially happened was silver and gold on September 25th, 2025, started skyrocketing. It became the trade that everyone was in. SLV, GLD were trending on StockTwits and Reddit almost every day. Those assets were already, to begin September 25th, multi-trillion-dollar assets. It's like Nvidia, but like 4 Nvidias and more than that, right? Gold was like a $20 trillion market cap before all this started. Silver was like a $4 trillion market cap before all this started. It's like 4 or 5 Nvidias. Imagine it like that. Just more than doubled. Okay. it sucked all of the liquidity and the life out of this market in crypto, in risk assets. Okay. Now, why? Well, there was a lot of shorts on silver and gold, specifically silver. Nobody was really expecting silver, a asset that didn't do much for a long time, to do as well as it did. In fact, JP Morgan had a massive short position on silver, and many other firms did as well. You could see on Friday, silver was down about 25%. At one point, it was down a lot more than that. Silver went from $121 at the high down to $74. You can see here on December 2nd, 2025, the US banks had 17,838 silver futures short. That is 89.19 million ounces. At $121, that is $10.8 billion in notional value. That's a lot for the banks. Okay, so what happened, as people are speculating, is there was some kind of manipulation, silver fell. Now, what actually happened was the LME, the London Metals Exchange, delayed trading for about an hour and a half. That kind of killed momentum. Maybe there was some weird thing that happened with the orders. It's such a momentum trade that it came down aggressively. What goes up must come down, inevitably. JP Morgan and other banks covered on their positions. So I think some of the volatility might be coming to an end soon in silver and gold. Now, why is this important? Well, remember just a couple of weeks ago, I think a lot of people forgot this, but overnight, silver collateral requirements or margin requirements were raised. And people are like, oh my gosh, like what happened, right? Why did you just see these margin requirements raised on silver and gold? Well, it's because there was a lot of shorts that were short these assets. There were a lot of people getting hurt as these assets went higher, silver and gold. You know, for everyone that was short in those assets, yeah, they did not have a good time. Okay. But it's not like these banks or the guys that were short silver and gold were only in silver and gold. They're in stocks, they're in crypto, they're in real assets, they're giving out loans, they're in venture capital, right? They're in all kinds of different things. So what happens if you have a whole portfolio? Imagine yourself, maybe you got 10 stocks in your portfolio that you really like, that you're invested in. Now imagine you have an 11th stock that you're really bearish on, that's a, $10 stock. And that stock you're really bearish on, you're short, and that stock triples in the course of 6 months. Okay? That's going to put pressure on your entire portfolio. Now imagine your other 9, 10 stocks are selling off and you're losing on your short. It's a snowball effect, right? It drained liquidity out of this market. Now, silver and gold, let me find the post here. They lost $6.38 trillion on Friday. Silver lost $2.6 trillion on Friday. Get this. They are still positive on the month. They were still positive for January. And these things started rallying September 25th. Okay? It's incredible. Let's look at SLV. Now, I'm not to the part where we expose, what's happening with equities, but you're literally just back to where you were on January 12th. From this point here, from literally September 25th, you are still up 84%. At the high, you were up 167%. Okay? Still up 84%. There's still, a lot of people that are on the wrong side of this trade. But the pressure valve has been released because of this decline. Okay? Now, in total, about $12 trillion worth of assets were wiped out on Friday. Okay, so this should help market liquidity, risk on stocks, crypto. But it's not going to happen immediately, right? Look at this. Okay, this is the whole it's exposed thing. This yellow line is silver, SLV, the ETF. This chart here is the software tech ETF. They have historically traded mostly in the same direction. There has been some periods where there has been an inverse correlation. Here, look, it was positively correlated, right? Markets are going up, silver's going up, markets start to come down, silver comes down, vice versa. Right here's another pretty notable period. Silver started selling off before stocks. Stocks were doing well, or software and tech at least. And then stocks came down a little bit, silver came down a little bit more, stocks recovered, silver recovered a bit. Stocks kind of sold off, silver traded sideways, and then you start correlating perfectly again. Okay, right here's another discorrelation slightly. Again, we're talking about just a couple of days of discorrelation. Silver went up and stocks went down. But over time, historically, silver has generally followed what stocks have done, what risk on stocks have done. Up until September 25th, you have never seen anything like this. Now, September 26th, or this is the weekly chart, okay? If we look at this on the daily, you'll be able to see it. It's just a lot more difficult. Okay. On September 23rd, you actually hit a high on silver, or on tech software. Silver sold off that day. The next day later, September 24th, silver sold off again alongside tech. There was a positive correlation here. What happened the next day later? Tech and software were down again. Silver went up. This is when the discorrelation started. When you stopped following the markets. Okay? As the markets were selling off, silver was going up. This is where the whole silver gold trade started to explode. And you've been very discorrelated ever since. They're not trading together. Okay? And these asset classes have went up, $15 trillion or so in additional value or more since September. Whoever's short these assets are getting wrecked. Okay? So whoever's short just got blown up, so that's going to put pressure on their stock portfolios, on their Bitcoin, on everything else. Okay? But even for a lot of retail investors, right? Nobody wanted to own stocks. The activity was gold and silver. Okay? So from both of those perspectives, whether you're short or long, it really took away the liquidity from markets, including crypto. Well, now you had this huge decline. Over $10 trillion of value was taken off the table from silver and gold on Friday alone. I'm not shocked that Bitcoin and cryptos are selling off this weekend. Why am I not surprised by this? The pace, the volatility, the speed. Okay. When you have an asset class, even if you're inverse to that, right? Like this relationship has been inversed, where silver has went up, stocks have went down because of, what's happening, shorts getting blown up, liquidity drying up in markets, all of that. Whatever, fine. But when you have something this aggressive and this kind of a violent reversal, it's not going to be initially positive for the inverse correlated asset class. It's going to draw up some fear. It's going to draw up some concern. Imagine if, I'm trying to think of a better example of this, but I want to make this make sense, okay? Imagine if, AMD came out tomorrow and said they're closing their doors, okay? Well, nobody expects that, right? Nobody was expecting a 9 sigma event in silver. Nobody would expect AMD to come out tomorrow and announce that they're done. Business is being dissolved. What do you think that would do to NVIDIA? NVIDIA would crash on that. Even though it has nothing to do with NVIDIA, even though AMD shutting their doors would be great for NVIDIA, right? Competition's gone. No competition. Wouldn't that be great for NVIDIA? Yeah. But would NVIDIA initially go higher on that? No. Would NVIDIA over the next couple of days and weeks move higher on that? Yeah, absolutely. So it's about volatility, pace, and speed. And this move on Friday in silver was just too fast and too big to cause a positive reaction in markets. Okay, even if they are inversely correlated as of September 25th. But silver trade continues to take a breather, continues to move lower or even sideways at this point. I would expect that stocks can begin to do better. Now, this is also the same for crypto, right? Just the same example I gave you. I wouldn't expect crypto is going to do well initially on major volatility in silver and gold, something volatility in which we've never seen before, right? And I'm not surprised that Bitcoin is moving lower over this weekend, especially since the markets are not open and you can't see that reaction. Now, there's a lot of other issues in Bitcoin. You're starting to get, and Ethereum and all cryptos really, you're starting to get to a level in which a lot of people never thought we would hit ever again. People were thinking 200,000 in Bitcoin by the end of 2025, not 80,000, not 77,000. So there was a lot of people in leverage that were not expecting this, okay? That were not prepared for this. In fact, MicroStrategy's entire Bitcoin position goes in the red at about $76,000, okay? That's a problem. If you start to fall materially below that, what happens if you get to 60,000? There's going to be incremental selling, and those are A-plus tier firms. What about Bitmine? Tom Lee's portfolio down $6 billion in their Ethereum. Even if those companies wouldn't be forced to sell or go through some kind of, big problem, what about the mid-tier companies, treasury companies, and other people that are leveraged to Bitcoin and other cryptos? I'm sure they're getting smoked a lot worse than Tom Lee and MicroStrategy. Okay, so there's a little bit of that happening to Bitcoin as well. And I do think if we can get a market that recovers in this upcoming week, it's also going to help crypto. Now, tomorrow morning, I'm expecting it's probably going to be pretty red. Now, you did have your first bank failure of 2026 over this weekend as well. It's not being talked about much on financial media sources as of right now. I haven't heard any, like CNBC hasn't covered this, or, your large financial firms or news outlets. But I'm sure it's going to be priced into the algos. And I'm sure just given everything here, what happened on Friday, bank failure, Bitcoin coming under pressure over this weekend, you're probably going to have a rough start to the trading week. What I want to see is, do we buy that on the open? Do markets begin to recover throughout the trading day on Monday? If we don't, that's a big problem, okay? That's a red flag. We do have catalyst in this upcoming week that will be very important for markets, that will kind of, solidify we might be heading towards a correction or crash here, or it's time to recover. And we will get into that in the next video, specifically go over all of your earnings, all of your economic data, the events that are going to take place, and my expectations for this market and for Tesla stock included. So yeah, I hope you guys join me at 8 p.m. when that video comes out, because it is absolutely critical that we understand the setup here for markets. I've said now for a week or two that I didn't exactly love the market setup. I didn't like the risk to reward in markets. I didn't like what was going on in silver. I thought it was unhealthy. Okay. It's not a good sign, right? What's happening in software, what's happening in tech. It's just not a good sign. And it's not a good setup. If we can get through some of these catalysts and events, that's great. Now, I should also mention that some of what happened to silver and markets is sell the news on a new Fed chair. Like, you were going to have downside pressure regardless whenever that news came out. It so happened to come out Thursday night, so markets responded to it on Friday. That also was a contributing factor to what happened to markets on Friday and likely crypto over this weekend. But that's why tomorrow's going to tell us a whole lot. Do we buy the recovery tomorrow morning? Like, our futures down 1.5% tonight. That would be my guess. And then we can recover, go positive tomorrow, or go positive on Tuesday. That would be a really, really good sign. If we have a bad day tomorrow, and then like maybe another bad day, we don't get a bounce back, that's the thing that I'm going to be watching for, because that would signal maybe there's some larger issues here with the whole silver gold situation or margin and leverage. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you guys have not done so already. Have a great rest of your day, and I will see you in the next one.